Our next guest says the Fed put is alive and well, and that's one of 4 positive signs he's seeing for the markets this week. Joining us is Fundstrat's head of research, Tom Lee, also a Cnbc contributor. Tom, it's good to have you, and let's just kind of start with that theme, and maybe you can build on what Steve just told us. How do you interpret the Fed's move yesterday? Welcome.
Well, I think markets were positively surprised by the Fed's move, in part because recent staff papers from the Fed had argued tariffs would actually be multi-year inflationary effects. So Fed Chair Powell's comments yesterday, I think, did catch a lot of folks by surprise, just because it is a view that markets probably want to hear, that they'd like to hear that the Fed is viewing tariffs as possibly transitory, because that puts them in a position to actually intervene if labor markets start to weaken. And in fact, that's evident in the SEP, because 90% of Fed staffers now see not only risk to growth, the GDP growth forecast, but it was 90% seeing it as downside risk.
Steve, would you agree with that characterization, or how do you think the Fed or Goolsbee or a member like that might respond to the idea that they're still at the ready to support the economy?
They're at the ready to support the economy through keeping rates where they are right now. He kind of took off the table, or never has put on the table, this idea of hiking rates. I think it's a difficult and very interesting dance the Fed has to do here. I think there's an argument, and people I've talked to have supported this, of the Fed talking tough right now about inflation to make sure and play a role in the idea that the tariffs do not become a broader inflationary, have a broader inflationary effect, but then being ready as needed to address the downside. Right now, it seems like, because Powell feels like he's restrictive enough to deal with that inflation problem, that all the talk or the leaning here is addressing the potential negative effects of the tariffs, and the idea that they both brought down their growth forecast while they raised the inflation forecast. If this were the Volcker Fed or the Volcker idea, Kelly, you would say that Paul Volcker would be addressing the inflation problem and then get to the growth problem.
Right, and Powell repeatedly says Volcker's the Fed chair that he kind of admires the most.
Yeah.
Granted, the inflation back then was very different than what we're dealing with now. Tom, even as the markets are digesting what Steve said, this kind of lower growth, stickier inflation environment, and not taking it all that well, what are the other positive signs you're seeing for stocks this week?
Well, I think that the sort of the big elephant in the room has been the absolute fear that has become systematic in markets around April 2nd and the tariff deadlines. And I think that there have been little hints this week that instead of April 2nd being the date of some sort of annihilation of trade relationships, that we may start to see either deals before then or even delays in implementation. And I think that really investors are going to breathe a sigh of relief, because, as you can tell, pessimism has become very pervasive because of the fears of what will happen on April 2. So I think that's a positive. And then the other is, and it's really a technical perspective, but Mark Newton, our head of technical strategy, has pointed out there are increasing signs of that we've actually established a tradable bottom. And that's not only the fact that we declined so quickly, but it's that market breadth has really been expanding and then actually following through in a way that looks like this is not a 10% decline that's leading to a 20%, but a 10% waterfall decline / heart attack for stocks driven by rage selling, and now it's tradable.
So those would be a couple of big positives, kind of technical signs, maybe April 2nd, because I've seen that reporting too, where they're, the White House evidently working with trading partners, trying to get some stuff dialed back before April 2nd and so forth. What else, Tom, do you see that encourages you?
Well, I'd say that probably the final thing that I've seen is, and this is really from our meeting with clients, is that we know there's actually quite a lot of dry powder. Many of our clients have raised a lot of cash. I mean, it's also evident in a lot of the money market balances or prime brokerage de-risking that's taken place. And it's at a time when investor sentiment has moved far more than is justified by the market moves. Whether you look at AAII or Investors Intelligence, both have registered recession-like readings and sentiment. And so it really creates the room for positive surprise. And that, again, I think it'll, like what you just said, if tariff headlines aren't as bearish, and if there's all this last-minute work on negotiating something, and yesterday there was a tweet about how into the night Hassett and Lutnick and Bessent were, working on a trade deal, that got so little notice. I think it just tells me markets could be positively surprised.